Hello, everybody. Nathan Long, president of Quest Trust Company. I am excited to be here at CapitalCon and invited here by the Family Office Club. I can't tell you how much I appreciate the opportunity to share some education and thoughts with some of you guys that are forming deals and doing things, and the opportunity to meet some of you. The use of retirement accounts can be very, very important when raising funds for syndication or any type of real estate transactions, and can be very, very beneficial for you. It is kind of important to understand that when you're using a custodian like Quest, that we're always a neutral party. Right? We can never receive a commission. We can't be part of the deal, which has a lot of advantages for you. Like if you're the person raising money, you can always go to Quest and know that the information that they provide is always going to be free of any information or affected by any of the consequences on any deals, whether you're the person seeking to use money, the syndicator, or somebody who's putting money in. You can always understand that the education and information that Quest provides is always free or of any of those encumbrances. But it's important to also understand that we're legally obligated to process all the transactions that come through, as long as they're not obviously what we call prohibited. So make sure that you understand any investments that you're involved in, right? The average client at Quest pays a few $100s a year. It's we're not doing that due diligence. It's really important that you take the time to do that and understand what happens when investments go wrong and do those type of things. So I always think that this is an interesting fact or a little thing, but right now if you looked at all of the United States individual retirement accounts, right? Most of them are funded from old 401ks or 403bs, those things, right? And actually, as of this year, due to COVID, there's more money in IRAs than there are in qualified plans, because a lot of people lost their jobs or took payouts. And so they moved a lot of this money into IRA, which gives us more money available for investment than there ever has been in the history of investing as far as personal investment. And only 2% of the total amount of all those retirement accounts is self-directed into the things like we were talking about, into real estate deals and other things. Yet 25% of all IRAs that are valued over $5 million are self-directed. Seems like a pretty good deal to me if you really start looking at the number, right? Again, just a little bit about Quest. We're a self-directed provider. We have clients all over the country. We are based out of Houston, Texas. We have over 18,000 clients. And one of the things that we're really known at doing good is understanding your investment needs and processing our investments very, very quickly, within 24 to 48 hours. In most cases, it can even be faster than that sometimes when everything's going right and goes well. So the thing is we're really educated as to what to talk to and how to do it, to move these processes through as we go. All right. So if you're going to be using retirement funds to fund transactions, there really is two different ways that you're using them. You're either A, the syndicator, the person that's using someone else's retirement funds, or B, you're taking your retirement funds and putting them into someone else's deal, right? So we want to look at both sides of the fence so we can talk to both things, right? And there's different types of accounts that can do this. This is what I think is really one of the things that a lot of people miss on both sides of the fence. Is if I'm going to raise money, let's say I'm going to build an apartment complex or syndication, it really makes sense to try to raise some of that money from retirement funds, because it's actually some of the easiest money that you can get out there because it's readily available. But where we miss a lot of times is most people just go straight to the traditional IRA. That's where people had their rollover funds from 401ks and all of that type of stuff. And that's what they invest with. But the reality of it is you can use traditional IRAs or Roth IRAs. A lot of people have employer plans that are self-employed, like a SEP IRA or a simple IRA. And especially in the use of debt leveraged investments, like what we're doing, debt leveraged real estate, the use of a solo 401k becomes extremely important for some investors in avoiding something that we call unrelated business income tax. But also there's specialty accounts, and this blows people away, that's using a health savings account or a Coverdell education account to fund into a major syndication deal. How does that work? Well, you could partner these accounts together often. Though they're disqualified persons for their, they can't buy, sell, or trade their shares between each other. Let's say if I wanted to participate into an apartment complex, right? I'm a qualified investor, right? So I meet those standards. That means that my IRA would also meet those standards. But in the end, I'm not the actual investor. It's my IRA, right? And it reports to an EIN number related to the IRA, or it's actually related to Quest, right? Because that shows our tax-free reporting that we go through. So if I had a traditional IRA, but I also had a Roth IRA, but what else? What happens if I had my children had a Roth IRA or a Coverdell education account, or maybe I have a little amount in a health savings account? I can partner all those together and allow those little accounts to kind of tailgate on my bigger account and receive that same type of benefit. Man, this is powerful. Now, for the syndicating attorney, it's no problem, because what are they doing? They're reporting back to the one tax ID number, Quest. Quest is splitting up all these differences as that money comes in. This is so fun. This has worked really well in my family, because what it's allowed me to do is, as my kids were growing up, I would invest their little Roth IRAs and stuff with mine, and they learned about investing. If you're the syndicator and gathering money, what a great concept. Rather than just talking to one person about their money, you get to start to talk to the whole family. And when you bring in Quest, you're bringing in wealth building concepts and other things. And again, a completely neutral third party. So it just adds to your professionalism as you go along. And I think these are the things that you need to expect from your custodian if you're going to use one. Expect that they can provide education. Expect that they can be helpful with your transaction. Expect that they can expedite things quickly. To me, those are the responsibilities that I have as your custodian, or what I'm trying to do for them. It is important to understand in these accounts that there are restrictions on them, right? The restrictions become prohibited transaction, which can be very bad. The worst of the restrictions are prohibited transactions involving what we call disqualified persons. You see, there are people who can't benefit from the investment the IRA makes. And basically that's you. Your IRA money is for the future. So you can't take your IRA and invest it in your own syndication. Nor could you take your wife's IRA, your children, or your parents' IRA, or their spouses, or funds from any of those people's involved. They could be disqualified through companies like LLCs or other entities that they own. Sounds like it could be a little bit complicated, but don't worry. We have tons of educations, and we help you to figure out how to structure and create the deals the way that would work best for you through our education process. Though we can't give tax, legal, or investment advice, since we've seen so many deals, we can often talk about what would happen if I did this, or what would happen if I do that. And these conversations are often helpful when you're forming your deal, when you're with the syndication to figure out the best way to deal with IRAs, right? Other ways IRAs use money is sometimes rather than like in a syndication type of deal, the IRA is simply a lender. They're loaning to the deal secured by real estate or other assets. Of course, this is going to be, the laws regarding this is going to be state specific. So it's different for each state, but this works very well. We see about 40% of our smaller type of transactions, typically it's not the big, we're not going to build a hospital loaning things like of that. We were going to use a normal syndication deal, but small loans are often very good ways to fund private investors, and we have a lot of education about that. But of course, more commonly, we're using IRAs as a passive investment, right? If I wanted to raise fund, I couldn't use my IRA or my wife's IRA or children or parents, but I could use other people's IRAs, right? So we want to be sure, if we're going to do that, that we've taken some time to talk to an IRA specialist at Quest and understand disqualified people so that we can understand how to structure that correctly. And make sure that when you're doing it, that you're seeking advice of a competent securities attorney that's familiar with using retirement accounts and the limitations of them, especially as it relates to such things as plan asset regulations and stuff like that. Most of the time I see when we're using retirement accounts, we keep the amount below 25% of the total funds raised in order to avoid problems with the plan asset regulations. In addition to that, a lot of the investments that we do with real estate that is debt leveraged, that has a loan on it, which is almost all commercial real estate, can occur unrelated business income tax inside of IRAs. Again, nothing to be worried about, but something to think about and do a little research as we go into the structuring, right? I think that it's really important to understand. This seems like it could be complicated. I mean, wow, dealing with retirement account sounds like it can be a lot. I mean, it can. There are certainly complications in there and things that can make it a little bit more difficult, but it's not insurmountable, especially when you're using the right custodian in order to fund your transactions as you go through. There's plenty of good education and things that you can learn. And the reason why you want to do it is because there's a lot of money out there, right? And it's good for you. And it's also very good for the people who are using it in their retirement accounts. I could show you example after example after example of very good wealth building, right? Both for yourself and for your whole family if you use these concepts correctly. I wish I had more time to go over everything, but I don't. There's some other classes that we have out there that go into these concepts a lot more, and I really encourage you to look into some of them. All of our education services are free, whether you're a client or not. You can call and talk to an IRA specialist, whether you're a client or not, or even a client of another company. Even if you're using some company and you ran across something and you can't figure out the education or what to do, don't be afraid. Pick up the phone, ask for an IRA specialist. You're going to be talking to somebody that's very knowledgeable about what they're talking about, what to do, and we have them on staff all the time. I hope this little video has been helpful for you. Again, I'm so happy that I was invited to come here today. If you have any questions, again, just call us up at 855-FUN-IRAs and ask for an IRA specialist, or just email iraspecialist@questtrust.com. Tons of education out there, also on Facebook and YouTube and all types of places. Just let us know what you're trying to do, and we'll provide the education that best suits what you're wanting to do. Thank you again, Nathan from Quest Trust Company.